Good morning, good morning, good morning. Hey, this is Rob Rosa. Hopefully your favorite real estate broker, my friends. I'm out early this morning showing some properties. I have to start off showing a commercial property. And then we're going to move on to quite a few residential this morning and early afternoon. But I'm early for my appointment for my first showing. So I figured, you know what? Let's get on TikTok. Let's see who has any questions. Let's go over some loan programs and be prepared to ask me anything you want. We can discuss some real estate tips, especially if you're a buyer and you're not sure what to do, how to get the winning edge on buying a property. If you are a seller, well, you know it. Of course, we know that it's not hard to put a property on the market in today's world. But at the same time, we also know that if you're not using that real estate agent who has the knowledge, who has the experience, who has the guidance, that you could very easily leave money on the table. So you don't want to do that. You don't want to leave money on the table, right? We know you want to make the most money possible. So let's talk a little bit about some loan programs and maybe some of the ways that things look when it comes to putting together a transaction, right? And so the first thing when you meet up with a real estate agent or when you're thinking about buying a property, and really this goes for commercial or residential, is you need to understand, well, how are you going to pay for it? You know, most buyers, including myself, I'm not going to lie, hey, if we want to buy a property, we get excited about it, right? We want to go look at it right away. We want to be able to get things started and get excited and see the hope and the vision of that particular property. But it really doesn't make sense to do that until you understand how you're going to pay for that property. So, you know, are you going to pay in cash? Which, believe it or not, a lot of people buy properties in cash, right? Or are you going to give a mortgage? Are you going to get financing for that particular property, right? And so again, as we're going through some of these different loan programs, some of these different opportunities, you know, feel free to follow me. Feel free to ask me any questions that you might have so that I can help you every step of the way. So the first thing, if you have to get financing, is the lender usually wants to know, hey, what are you going to do with your loan what is your loan to value, right? How much can they give you towards that property? So example, let's say if you were going for the typical FHA loan for a residential property, right? The down payment, and there's all different loan programs. So you could be a mortgage person, you can be saying, oh, that's not exactly true. But generally speaking, right, that's what we're doing here. The down payment is 3.5%, right? Generally speaking, for an FHA loan, what most people are doing is 3.5% down. So the loan to value actually is 96.5%. You see, you have a full pie. And if you take that 3.5% out of it, that the lender is going to give you towards the purchase price or the appraised value, whichever is lower, you have 96.5%. So of course, the lower the loan to value, right? Which means, like, let's say example, the difference between putting 3.5% down to putting 20% down, right? The lower the loan to value, the least risk you are to the bank. The higher the loan to value, the higher the risk you are to the lender. Okay? So if you're putting 20% down, what's left out of that full pie? If you take out 20%, you have 80% left, right? So the loan to value for that particular loan would be 80%, which means that you are a less of a risk for that lender. So hopefully you kind of understand loan to value. Now, when we're talking about the different types of loans, the first ones that we love to talk about, especially when it comes to residential, is conventional loans. Because you see, usually a conventional loan will give you a perspective. You will give a perspective to the seller, right? That you have more strength, that you are a stronger buyer, that they don't have to worry necessarily about you not being able to get the loan. Of course, we work with buyers every single day that maybe they're doing a VA loan or a USDA loan or an FHA loan, and those are considered to be government-related loans, right? And those are acceptable by sellers, but if you are coming to the table with a conventional loan, right, that doesn't have to be any kind of relationship to the government, that we don't have to worry as much as of some of the criteria that's included. In many cases, the seller is going to look at you as being a stronger buyer, right? And so that seller wants to be able to have a smooth transaction, not have to worry about what you're doing as far as buying that particular home and some of the things that could come up during appraisals of those government-related loans, right? Now, it used to be back in the old days, right? Back in the olden days, that to be a conventional loan, you were putting down at least 20%, right? 20% down payment. But that's the old days. I've heard of some conventional loans these days. You can put 3% down. You can put 5% down. You can put 10% down. There's all kinds of different programs that are available. So if it's something that you want to walk down that path and learn more about, all you need to do is contact me. All you need to do is reach out to me. And between myself and my colleague, who's an excellent loan officer, we will be able to help you every step of the way and explain to you what you might be qualified for. Because, it does kind of depend upon your credentials, right? Of course, it depends upon your credit score, which if you need help with your credit score, do we do credit repair? Of course we do. So we can help you with your credit score if you need to. Right? Of course, it depends on how much income you have and what you're ultimately, what the down payment is going to be and what you can afford. They're going to look at work history. They're going to look at what kind of exceptions you might have on your credit report and that sort of thing, right? So that's some of the things when we talk about conventional loans as to how you are going to be able to use all these different kinds of loan programs. Now, the wonderful world of FHA. Hey, who doesn't love FHA loans? Everybody does around here. FHA loans are insured, right, by the FHA. It doesn't mean that they're guaranteed, right? It doesn't mean that the government is giving you the money. The lender is giving you the money, but the lender will be somewhat insured that in case there was some sort of default, right, they would be able to get some sort of money. And you technically, as the borrower, are paying for that. And you're paying that through mortgage insurance, right? So every month, even at the closing, right, there's going to be some money involved that you're going to put towards an insurance policy for the lender, right? And then every month you're going to be paying some mortgage insurance as part of your monthly payment. But even when it comes with these programs, it's nothing to be nervous about. I mean, remember, they are allowing you to borrow this money over 30 years, right? And the interest rates right now are incredible. So let's talk briefly about that. Right now, you might be watching the real estate market and be like, oh my gosh, I'm never going to buy a house right now. I would never buy at these prices. People are crazy. They're getting ripped off. Well, in my opinion, right, that's a little bit of shallow thinking. And here's the reason why. Right now, these interest rates, even though they're creeping up every other day, little bit by little bit, they're still the lowest in the history of us tracking interest rates, right? I mean, over the last 80 to 100 years, these interest rates are incredible. So even if you have to pay 20, 25, 30,000 or a little bit more for that home, for that purchase price, believe it or not, with that low interest rate, your monthly mortgage amount is still pretty low in comparison. So you might say, well, here's the comparison. I'm going to wait a year or two or three, and who knows when things are going to change with the market, right? Well, what's going to make the market change? In my opinion, if it was to really happen where all of a sudden there's a lot more homes on the house, there's a lot more homes on the market, and the prices are going down, well, that's most likely because there's something huge going on in the economy and interest rates are probably going up. So that same home, let's say you save $20,000, $30,000 for in a couple of years, but the interest rate went up 2 or 3%, you might be paying an extra $70,000, $80,000, $90,000 or more for that same property. So if you ever want to go over the exact numbers and get a good understanding, well, what's the difference between now and waiting, I can definitely help you with that, right? Because it does make a lot more sense to buy with the lower interest rates. If you're buying in cash, of course you're probably going to want to wait. That would probably make sense, right? And I'm in the business of helping people buy and sell properties. But if you're buying in cash and you don't need to buy right now, that's one thing. But if you're buying with a mortgage and you can get those low interest rates, I can tell you, I can almost promise you, you're going to make out better now. And I can show you the financial numbers, right? So that's definitely going to help you every step of the way. Now, the next topic I wanted to go over is HUD Homes, right? So when we think about HUD Homes, because everybody wants foreclosures, everybody wants to get a great deal, right? So let's talk a little bit about these HUD Homes. Well, what are these HUD Homes? These are usually foreclosures, right, that were FHA insured homes, right? And usually what HUD will do is they will accept bids on those properties only from real estate agents that are registered with HUD. Now, these properties are usually sold in as-is condition, right? And which means that HUD is generally not going to make any kind of repairs on these properties. And some of them need a lot of work. So what you would want to do is if you find this home that you're like, oh, wow, I can fix it up, I can do what I need to do. Now, it's great if you're buying one of these in cash, okay? If you're not, there's all kinds of different programs that we could maybe help you with. If you're a veteran, God bless you. We appreciate your service, and we might be able to do, believe it or not, a VA renovation loan. We might be able to do an FHA 203K. There's so many different types of renovation loans that we can potentially help you with, right? And so these are usually intended, right, for owner occupants. So the early part of the bidding process usually is government entities and nonprofits, and that's for the first, let's just say, make it up, usually it's about 7 days or 14 days. And then after that, it's usually for owner occupants, another 7 or 14 days. And then after that, if they still don't accept any bids, then we would be talking about investors. So if you're an investor, it might be harder for you to get a HUD home because you have to wait longer, right? We even have what's called the HUD Good Neighbor Next Door program, right? And so these sound awesome on the surface, right? Because what you get is you get a 50%. That's right. You heard me correct. 50, half, right? 50% discount. But they are only really in revitalization areas, right? So some of these, and you have to occupy the premises for at least a minimum of 36 months, right? So if you were to go on hudhomestore.com and check these out, you're going to find out there's not a lot of these, but every now and then you'll find one, and they will need work most of the time. So just be prepared that you are going to have to do some renovations. You're going to have to get a renovation loan. So that's what I have for you right now concerning loan programs. Wanted to spend a few minutes kind of going over those. If you have any questions, you want to learn more about them, you want to learn how you can take the next step, you want to talk more about maybe selling your property and learning what are the pitfalls that you have to be careful of, just let me know. Reach out to me. We can talk. I'm mainly based in Connecticut, but I do credit repair nationwide. And I'd love to be of help to you any way I can. So God bless you. Hopefully you're having a great morning, and we'll talk to you soon. Rob Rosa signing out.